Marabang, ladies and gentlemen. I'm Hiral Dadia, Mr. Jonathan Barratt, CIO at Probus Securities, joining in. Welcome to the show, Jonathan, and always a pleasure to speak to you and get insights from you for all the viewers who are watching us globally. Jonathan, my first question coming to you, as we were just discussing, inflation has been one of the major concerns that majority of the economies across are grappling with. How do you think will the economies actually hold up in such an inflationary environment? Do you think it's going to be a major concern?
Look, I think it's a concern, and it is a major concern on the interim. It's really how the central banks will behave over the course of the next 6 to 18 months as to see whether or not it's going to be a little bit more deep-seated. It is a major concern that a lot of the economies are facing with. If you look at sort of just some of your primary input markets, crude oil just this year is up 53%, coal is up 212%, natural gas in Europe's up around 307%. So all these primary input prices are at exaggerated levels, and until they can come back into control, the central banks have a real challenge. That the economies don't fall into recession and that the economies can just continue to bubble along. But yes, it is an issue, and it's something that the central banks really need to rein in very quickly.
Right. So with all of that said and done, as you mentioned, crude, natural gas, gold, three commodities which have seen a sharp increase over the last couple of months. And simultaneously, if you see in terms of base metals as well as industrial metals, due to slower economic activity, there is some bit of demand destruction that is coming in. How are you viewing that basket?
Look, I think when you look at your base metal markets, you are right. The market is perceiving that the economies will slow. Remember, we've also had COVID issues in China, and things have slowed down as a result of that. We've had some pretty horrific economic numbers out of China. So when you see that, you get a sense that some of your base metal prices would be under pressure. And when they're under pressure, it's because of the demand. And of course, we need those economies to put in some form of stimulus to build them back up again. But having said that, you still have seen a rise in a lot of those base metals over the year. I think zinc has been up around about 20%, nickel's up around about 50%. Obviously, when you look at copper, that hasn't been such a lead, and that's the litmus we all look at for global economic recovery. And of course, that's sort of at a level, it has had a rise, but not as much as the others. So we do see that destruction there, obviously less than the other commodities. But I think going forward, there is that concern that the market will start to perceive some economies will come under pressure, and as a result of that, we should see some easing in some of those base metal complexes.
Right. So what is the quantum of correction that we could expect, especially in the base metal basket? And, depending on how the economy holds up, I mean, what are the kind of, segments are you tracking?
Look, I think when you look at it, and let's sort of look at copper, for instance, okay? When you look through the base metal complex, when you look at copper, and as we said, that's a litmus test for economies, on the year, that's down 5%. So that's actually telling us that the outlook is not that positive, although you might remember that we're at a shortage of copper not so long ago. So things have turned around there, and the market is starting to weigh the difference between economic recoveries in the next 6 to 18 months or whether we actually go into recession. So when you look at sort of which baskets of commodities do we look at, I think you have to really look at the overall indexes, like the CRB index, to get a sense of where the commodities, our primary input markets, are actually going to pull the economies. Because if the CRB index starts to come under pressure, then we get a sense that we'll get some relief. And if we get some relief from the primary input markets, then you can see that inflation is becoming under control. Naturally, we've got players in there, obviously, with what's happening in the Ukraine and China, Ukraine and Russia, and China's demand. And as a result of that, we're seeing these inflated prices. But if some of these areas get out of the way, some of these macro issues get out of the way or get resolved, then we should get some normality. So really, it's a mixed bag outlook at the moment, and it's really done by sector. And I think it's one of the hardest markets I think I've dealt with for some time.
Right. And overall, if you see in terms of precious metals as well, the kind of run that gold has seen, do you think silver is going to play a catch-up rally? Or do you think the pressure of it being used on the industrial side of it is going to put, it's not going to really let silver play a catch-up rally with gold?
Look, I think generally most of us are a little bit disappointed with gold's behaviour. And we see it very much linked to the US dollar and obviously that US dollar index, more so than I think I've seen in many, many years. Gold used to have its own flavour to a certain extent when it fought inflation and as a price preserver or value preserver. But this time around, it seems to be just in tune with the US dollar. Silver obviously been playing well and holding up well. I would anticipate that gold-silver ratio will move into more favour for silver because I like silver from these levels, that industrial metal, but also that bit of inflation fighter there. But it really does have a lot to do with what the US dollar is because the nexus is very firm between what the US dollar does and how those precious metals will actually behave. I would actually like to think, because we're up with that US dollar around that 104, 105, that the US will try and get that dollar weaker. As a result of that, we'll see the precious metal markets have a good move to the top side.
Right. And coming to oil and natural gas, you have the OPEC, we're clearly bringing 9.7 million barrels a day back to the market, is the latest adjustment decision that they have made. Do you think that's something which will help us bring oil prices down? Or do you think, that's not something which will really have a major impact in terms of the way prices are moving?
Look, I think when you look at Brent crude, and you look at the range, 125, 105, $20 range, given where we're at, I think it's very hard to basically say, are we going to break through that 125 on the top side? Or what are the forces that are going to force it through 105? I think that is a range for some time. When you look at the supply and demand, you can see that demand might soften, but obviously the supply is the concern that we have. And the dynamics in that market is changing. Just remember, we also have now Russia is the number one provider of oil to China. So there's a little bit of concern there. Saudi Arabia, in terms of its exports, are at a 23-month high. So where that oil's going is just going to the market. And of course, we've got Biden trying to visit Saudi Arabia and obviously getting snubbed a little bit in terms of what he has to offer. So when you look at the range, I see the supply and demand side of it as being quite equal at the moment. And I think that we've still got some wild cards out there. I think that given where we are, particularly with the Brent contract, that we are at a reasonable low here and probably suggests it heads back to the top side. Really, I think we've really got to see what happens out of OPEC, out of the Ukraine situation, where Russia sees, particularly in terms of what Russia is doing with the natural gas market into Europe and how Europe's behaving to what Russia is saying in terms of their supply of natural gas. When you look at a market that's up around that, 300, 400% at some stage, the players there need to resolve their differences before that market to come back in normal, back into equilibrium. But at the moment, it's certainly skewed to the persuasions of the politics and the macros at the moment.
Right. And coming to natural gas as well, clearly the forecast that we are seeing right now is for a much lower demand. And that's something which is starting to put some bit of pressure in terms of natural gas prices. Are we expecting a major correction? Because the way it's moved in the last 1.5 years, we've seen massive up moves coming in terms of natural gas. So what's that long-term trend, according to you, expected to look like?
Look, I really think it's up to how the players resolve their differences. At the moment, we're seeing a lot of natural gas coming from the US into Europe now. And with that happening there, we're sort of placating that demand issue that caused the spike when Russia decided to turn off the natural gas into Europe. If Russia can resolve its differences with Ukraine, well, then we'll have a flood of natural gas onto the market because everyone will be scrambling for dollars. Will it change the whole dynamic of the market? Yes, it will. What has happened between Russia and the EU, that whole dynamic has changed because the EU is sourcing resources from elsewhere. And whilst the natural gas price is up at these levels, those resources will be easily implemented because there are profits to be made. So I really think when you look at the natural gas price. You look at what Russia is doing. There, at these levels, there is scopes to negate any Russian gas, and that gas can come from elsewhere. And to me, that's a concern that Russia is actually playing with at the moment.
Right. So Jonathan, very lastly, from an investment perspective, and if you have to look at the commodities market right now, which would be your best investment bet?
Look, I think when you really look at it, the volatility is there. I do think that copper has overplayed itself quite dramatically. I do think that the inventory levels we had with copper, when we look at where the copper will be diverted to, the lower inventory levels, in my mind, suggest that that's reached somewhere close to a bit of a low, and I would be looking for copper prices to start to move up. Obviously, we've got concerns of inflation and interest rates, but when you look at the whole complex, if you're looking to buy, that would probably represent the best value. Overall, though, the commodity complex is very high across the board, so it might be very cheeky to put some puts on some of the commodities. Obviously, some puts on the natural gas market if that's resolved. But overall, I think the commodity complex is very high, so it's very hard to recommend buy orders across the board. Naturally, I like gold. Naturally, I like silver. Always have. But I think we'll get a bit of a bounce in those. So commodity prices are very high, but there are a few standouts.
Absolutely. There are a few standouts. And I think what moves from here on is something we need to see, because a lot of is dependent on how the global political situation and, everything pans out so far. So thank you so much, Jonathan, for joining us on the show. It's always a pleasure to speak to you and get insights from you for all our viewers as well. Thank you so much.
No problem. Thanks a lot. Bye-bye.
Thanks. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.